All right, friends, how you doing? Ernie here, and it is Wednesday, September 22nd, and it is our second zero DTE trading day of the week. Monday, a huge winner, and today, another huge winner in the face of the FOMC minutes being released today. And this was a very interesting one, and it's one of the reasons why today I want to talk about how the FOMC, the Federal Open Market Committee, or the Board of Federal Reserve Governors, along with their illustrious leader, Jerome Powell, have decided that they're going to guide this market, and how that affects our zero DTE. Our zero dash DTE strategies. Don't ever forget the dash. That's zero-DTE.com. You want to try out the service? It's zero-DTE.com/try. Pretty easy. And you'll be very, very happy when you do try, by the way. Anyways, back to the FOMC and what they mean to us. They don't mean a whole lot to us, really, as traders. The FOMC, although they will affect where the market goes in a large degree, and they telegraph it, so that is to our benefit. But I don't see the FOMC as hurting us or helping us, in that they are not doing anything that would make our job more difficult. On the contrary, I think that the way the FOMC telegraphs their moves, or how they're going to guide the economy, so they think they're doing, that is to our benefit. We find, in general, I'll have to say this, that in general, the FOMC and the Fed governors, some of them are okay, but they're, as a group, mostly wrong about everything that they're doing. When you consider that if they are in fact guiding the economy, they're doing a horrible job at it. So they rarely do what they say they're going to do, or what they're trying to do, or they use mealy-mouthed excuses to let us believe that they know what they're doing. But all of that aside, it is of no consequence, because regardless of whether or not what they're doing works or not, the market reacts to what they say. And that's what is important to us. There's the first article that has come out that I've seen on Yahoo Finance, and I'd like to explore that a little bit. Now, I haven't read it yet. I've only seen the headline, and it says Fed signals possibility of 6 to 7 rate hikes through 2024 as taper talks advance. All right. Now, they've been talking about tapering for a long time. And we're still in, I believe, that stage of talking about tapering. There are no real plans to taper. Now they've given us a date of 2024, because there was at some point a date that was floating around, like at the end of this year, in November or something. And of course, that went right out the window. What they do is they'll throw out this bait and then see how the market reacts to it. I don't believe that anything that what they're saying has true intent, other than to be like A/B testing from a marketing exec, right? That's what they're doing. They are testing the market, testing the waters by throwing chum out there and seeing how many sharks show up. They have no intention of tapering anytime soon. Now, first of all, what does tapering actually mean? In the truest sense of the word, tapering would mean reducing the Fed's balance sheet. And the reason why you would do that is that balance sheet, its largesse, cost us a lot of money, the taxpayers a lot of money to maintain. Those are represented by bonds, and those bonds, they are interest-bearing instruments, of which that interest is a debit to the United States tax holder, and we need to pay that. That is actually taking away from every dollar of interest that we pay towards bonds, treasuries, is a dollar that comes away from the budget. Actually, a better way to say that, every dollar that is added to the interest rates of the debt is an additional dollar that is taxed besides the budget on U.S. citizens. So if you want to look at it from a government positive point of view, if you're so inclined, in other words, if you think that the government is doing good things with our money, besides the necessary things that they should be charged to do, all this misspending and whatever, I don't know that you can consider it good, but some people do. They think that no matter what the government does, it's okay. Just give them all the money they want, and they'll spend it better than we can. Well, whatever that is, that amount of money that they are using to do supposed good, you can add to that the service that we have on the U.S. debt, which currently stands at something like, I don't know, 22 or 23. I might be off. I might be low. 23 trillion. I think it might be up to $24 trillion. We're paying interest on $24 trillion. Now, first of all, to get a handle around what $1 trillion is, $1 trillion is 1,000 billion. $1 billion is 1,000 million. So in other words, $1 trillion is $1 million. That's a lot of money. Now we have 24 of those in service that we're in service to. So before we get a single service out of the government, we need to pay the interest rate on that debt. Now, here's really the problem. That interest is now amounting to somewhere around, I think it's something ridiculous, like up to $1 trillion a year, or 25% of the total U.S. government budget, which I think now is around $4 trillion, if you can imagine that. Somewhere around there. These are numbers that I've heard. I don't have the exact numbers, so please, help me out if you know the exact numbers, but I think they're pretty close. Now, here's the problem. If the Fed were to raise interest rates, in other words, they would raise the amount it would cost to service that debt. Now, the reason why they raise interest rates is to try to slow down a heated economy. And why they're talking about slowing down a heated economy when the economy is in such turmoil and as slow as molasses is really beyond me. What they are trying to do, in one hand, is to project some hope that in the future, the whole COVID thing is going to subside and people are going to come back to work and everything will get back to normal. And then we will expand and blah, 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 blah. And then by really putting out there that, we're not just talking about a interest hike. We're talking about 6 or 7, maybe 30 interest hikes. All right? These are the word games that the Federal Reserve plays. So, again, now they're talking about 2024 when these hikes may finally be realized. 2024? That's 2.5 years away. What does that got to do with now? It has nothing to do with now. Absolutely nothing. And besides that, it is all rhetoric. So, as soon as the market heard that the Federal Reserve planned not to raise interest rates, which largely they already knew. And in fact, the entire bond market basically votes on this with their feet in the way they purchase bonds. And there was 100% certainty, according to the CBOE and their tracking of this, that they knew that interest rates would not rise. So there was no surprise coming into this. So there wasn't like a huge move up. There was a little bit of a move up. It was kind of relief. Oh, we're 100% certain that they're not going to raise rates. Oh, they're not going to raise rates. Let's move the market up a few points. It's just insane. And then they follow that up with, things are going really well, or we think things are going to go really well, so we might actually raise rates or hike rates 6 or 7 times in the next 3 years. And so they hear that. They don't hear 3 years or we might or things might get better. They just hear rate hikes 6 to 7 times, and the market goes apoplectic. And not so much so. I mean, it was somewhat subdued. So the market drops about, let's see, it dropped, 25, 30 points. And now it's regaining all of that. And I expect it to gain all of that back once they pick up their mind off of the sidewalk and realize that it is all just rhetoric and that there's no way in hell that the Fed could actually raise rates, because if they raised rates, the debt would become unserviceable unless we had an enormously expanding market and the economy just went gangbusters, which it's not, and there's no indication that it will not or that it will. So that is the situation we're in. We're in this giant word game. Giant word game. Rhetoric. FOMC rhetoric. That's all it is. Just words. This is really the only tool that they have. And so now we're advancing the tapering talks a little bit by front running it with this idea that we may be doing 6 or 7 rate hikes. And with rate hikes, well, what are they going to do? What's better, a rate hike or to taper? Right? So how do rate hikes advance the talk of tapering? Because they both would, in effect, do the same thing. Tapering would be like doing a rate hike. So which is it? Are they going to taper and then count that as a rate hike? Or are they going to rate hike and count that as a taper? Or are they going to do both? We don't know. But those are additional tools that the Federal Reserve has in their back pocket. They want to keep us thinking, that maybe they'll do both. Maybe they'll do neither. Maybe they'll do some of it. Maybe they'll do a little. And so the market reacts to that. Now, right now, the market is now taking that 30-point drop and just wiping it off the face of the planet. And they're going to go straight up. Of which, that means that our trade is going to make probably, I'm going to guess and say 600, maybe 800% today, which would be really cool. We've already had the opportunity to make about 400 or 500%. Until that whole idea of taper talk stuff came out, and then the market dropped. But now we're coming right back. So that's where we're at. And that's how I guess that the FOMC affects us as zero DTE traders. It's all just a game. Now we understand the game, and we understand that they're dealing with just a house of cards. It's all sleight of hand. It's magic. They're trying to present it as magic, that somehow they know what they're doing and they want to give the idea that they know what they're doing. And they're, guiding us to some sort of financial nirvana, which is all crap. They're not doing any of that. But we have to pay attention because their words matter. And our zero DTE trades only encompass a few short hours within that day. And so that can be impactful on the trades that we make. And that's really all we care about. We only care about those few short hours that influence the price, up or down, doesn't matter, how much it influences volatility, etc. So that's how the FOMC affects us. Now, we can talk a little bit more about whether or not tapering is going to actually happen. And I didn't give a pure definition of what tapering is. Tapering is the actual reduction of the balance sheet, the quantitative easing that is being spent every month. Currently, it's at a clip of $120 billion by the Federal Reserve. They are purchasing bonds and other assets at the rate of $120 billion per month. Now, what they're floating out there, their idea of tapering isn't reducing the total balance sheet that they're accumulating at the rate of $120 billion a month, which stands at over $8 trillion right now. They're not talking about reducing that $8 trillion. No. What they're talking about is reducing the rate of QE or bond purchasing that they're doing. So in other words, instead of spending $120 billion a month, they might spend $110 billion a month. So the balance sheet continues to grow. just at a slower clip, a slightly slower clip. A very, very small, slight adjustment to the rate of increase. But that, in of itself, is enough for the market to lose their minds, because that is backing off on the hopium that is being injected directly into the arm of Wall Street. And we know that, over time, we build up a resistance to any kind of drug that we take. And so right now, we're used to getting $120 billion injected mainline directly in. And that reduction will start us to kind of shiver and shake, kind of like getting the heebie-jeebies, as they say. If you know what that is. It's similar to when an alcoholic has to go cold turkey on drinking, or a cigarette smoker has to go cold turkey, or even worse, someone who is a heroin addict go cold turkey. They will literally go through days and days and days of the heebie-jeebies, the most intense pain and struggle and strife ever in their lives, as their body reacclimates to not receiving this hopium, or opium in their case. It's the same thing with Wall Street. Same exact thing. They don't want to have the heebie-jeebies. They fear the heebie-jeebies. So that's really where we're at. That's it in a nutshell, really. Now, I'd like to get to this article and just read a little bit of it and see what it has to say. It says the Federal Reserve on Wednesday telegraphed it could hike rates 6 to 7 times by the end of 2024, illustrating the central bank's optimism that the COVID-19 recovery will progress well enough for the Fed to tighten its easy money policies in a few years. But I'm confused. I keep on hearing about how bad the Delta variant is and how it is basically shutting down, and everyone's talking about vaccine mandates and all this other stuff. How is it getting better? Or is it just optimism that it's getting better? Is it misplaced optimism? I don't know. The policy-setting Federal Open Market Committee still held interest rates at near zero, or actually at zero, in its updated statement, but it said it had advanced talks on paring back its asset purchase program. All right? It had advanced talks. Now that means, see, there's really 4 levels. There are 4 reasons for the Spanish Inquisition. No, there are 4 levels to tapering, right? First, there's what they're engaged in right now, and where they're talking about tapering, right? Because they're not really talking about tapering. They're not setting any schedules or anything like that. They're talking, it's sort of a meta talk about tapering, right? How they're going to talk about, they're really talking about how they're going to talk about tapering is what they're doing right now. And this is what they mean by they're advancing the talks on tapering. Once they get beyond that point, once they get to the point where they can no longer bamboozle us with their nonsense about floating, throwing chum into the sea, they will start seriously considering tapering, talk about tapering. When will tapering actually happen? Now, they've already floated out here, like I said, this idea of 6 to 7 rate hikes by 2024, but that is so arbitrary. They haven't given any definitive dates or schedule or time frame or anything. And that's on purpose, because they don't intend to do that. So we are so far away from actually talking about tapering that right now we are still engaged in the 4th level of talking about how we're going to talk about tapering. Once we start getting into talking about tapering, then things are going to progress a little faster. We will then start talking about tapering, and we'll talk about how we're going to actually couch this, or how we're going to plan this, or what's the schedule going to be. Now, that's not actually creating the schedule, because that would be the 3rd level of tapering. The 3rd level is that once they've gotten beyond that level, and that could take years, who knows, maybe never, but the 3rd level will be actually setting a schedule. Now, that schedule is subject to things that could happen. And trust me, something will happen. So they're going to set a schedule, and if everything goes perfectly, the economy expands, full employment, COVID goes away, never another pandemic, then we will start tapering. Of course, that is some fantasy reality that the Fed is trying to paint for us. That's essentially what the third level is. And of course, the fourth level will be actual tapering. Now, I could put into that a fifth level, because actual tapering, as I said, would be a complete shutdown of the QE program, because there would be no need for QE if you were truly tapering. You would stop QE and then you would start reducing the balance sheet, which I don't see ever happening. That will never happen. Not in my lifetime. So now there really isn't 4 levels. There's 5 levels of tapering, which all resolve down to the same reality, and that is nothing's going to happen. They're going to keep interest rates at 0. Quantitative easing is going to go full bore, and probably expand once that next pandemic appears, which it will soon, or another variant mutation of the COVID. Right now we have the Delta variant, then there will be the Lambda, then there will be the Gamma, and any other Greek letter that you can come up with. It will happen. And then that will push everything out. Push it out. So we may go from the 5th level to the 4th level, back to the 5th level, back to the 4th level, to the 3rd, back to the 5th. Something like that. That's what I see happening. All the meanwhile, by the way, for us traders, this is wonderful. Just keep that market moving. And I think really that is really the design, because part of the problem of what QE produces is very low volatility. And low volatility, that anemic condition isn't really that great for the market. They can only do it for so long. They need a refresh. Now, they're not so wise as to let the market refresh on its own, because as humans, well, there is some argument as to whether or not people in government and in the Federal Reserve are actually humans. I think that they are aliens, actually. But as humans, we tend to like to take natural things and think that we can do better. We like to take squiggly lines and try to straighten them out. And that is exactly what the Fed does. That's what government does. They want to take the things that actually work and then improve them. Improve them. That's air quotes for those people on the podcast. So that's where we're at right now. I hope you understand. And this is entirely clear to you what we're actually dealing with. We're dealing with a world where eventually quantitative easing is going to spill over into some sort of universal basic income, a UB, and that will be our reality. Anyways, I hope this has been enlightening, and I hope you've learned something. The biggest thing you should have learned is that this does not affect us in the 0 DTE service and what we do in any way negatively at all.
New visitor.
If anything, what it does is it presents new opportunities. And we like that. And there's new opportunities 3 times a week, Monday, Wednesday, and Friday, every day that there's an expiration on options on the S&P. And we trade the E-mini futures, options on the E-mini futures, as well as options on the SPX, the SPY index, or the S&P index. Now, there is an interesting development that's going to happen later this fall, and that is that the SPX, the index, the big index, which is not something you can actually trade directly. You have to trade options on it because it's just a calculated index. Currently, you can only trade options on the SPX during market hours. And this is one of the reasons why the futures are such an asset to us, because it gives us the flexibility of trading 23 hours a day. Now, the CBOE has recently announced that both the SPX as well as the VIX are both going to be available to trade 23 hours a day starting November 21st. And that's going to open up a whole new set of possibilities for us, including an arbitrage between the futures and the SPX, I guess. But it will allow for more flexibility in the trades that we make, and we'll be able to combine the best of the options on the futures, which do not suffer from the pattern day trader rule, plus they have volume. We need the volume of the futures in order to do our analysis of where price is going to go, where the SPX doesn't have any volume. So we still need the futures. And then plus we'll be able to combine the cash settled feature of the SPX and the lower commission. So both of those things are benefits. Lower commission doesn't really affect us that much because our risk to reward, our reward is so big compared to the amount of risk that we take and the cost of our trades. Unlike other zero DTE strategies where they must trade the SPX because the cost of commissions so overwhelms the small amount of profit that they go for. That is a fundamental difference between what we do and what they do, plus the fact that we have an inversion of risk where they are constantly trying to manage their risk. We never manage our risk because there's no need, because our risk is so small. All we do is manage profits. That is the difference in the zero-DTE strategy. All right, that's everything. Let's see, do we have any questions? Let's go up to the peanut gallery and see. Do they have any questions? Jacob asks, hey, Ernie, as a trader with only one position and on a day like today, would you have sold for a good profit or would you keep holding to pin the trade? Well, that's a very good question, Jacob. We're close to getting inside of the profit tent, but we really only have, let's see, how much time we have? We only have half an hour to go. I would take the profit. Take the profit and run. That's what I would do. It's good profit. Take it. Be happy. As a matter of fact, while I'm here live, maybe that's what I'll do. We are inside of the, and there is a possibility that we could get another push up. So I think I'm going to hold it for a little while, because if we get another push up, we could go from a couple $100 of profit to $1,000 of profit. Who knows? Rebel Renegade wants to know, hey, Ernie, did you take ivermectin to treat COVID? Yes, I did, and it cured me. But we're not supposed to talk about that because that is, I guess, a no-no, to promote something that works. All right. Everybody, thank you very much. I really appreciate, and by the way, I did this all online and it was available. You go back and you can watch. Anyways, thank you very much. I appreciate you coming here, watching the show. Please come back on Friday. We're going to have another great show. I'm sure that it'll be another great trade for us. And right now we're turning the whole beginning of September around. September is one of the toughest months to trade. The first 2 weeks, we were still profitable in September. However, it slowed down from the previous months because of the low volatility. Now it's really starting to amp up, and we like that. All right. Thank you very much. Again, if you want to try out our strategy, we have a 4-week trial, and that would be zero-dte.com/try. All right. Thank you very much. Peace. Okay, gotta move all these windows. Where is that off button? Oh, there it is.